Good morning, everyone. It's Basse Ben Buckner here ahead of a USDA crop report tomorrow. It is September 10th. We are Thursday. We have export sales to talk about. We have markets that really aren't doing very much. In fact, looking at corn volume yesterday, it was the lowest in nearly a decade. And so this includes the holidays. So when you're only trading 160,000 contracts of corn, 55,000 contracts of wheat, it does leave the market in the lurch a little bit heading into a big USDA report. That being said, we do have, of course, some fundamentals that are circulating. We have export sales this morning. We are starting to get some harvest data in that's highly variable. I believe, Ben, as we go forward, we'll get more harvest data going forward, but kind of lead us to where you think we are looking at today and where we're heading longer term.
Yeah, sure. I think both sides are trying to make a case, yields, et cetera, and even we at AgriSource are going through scenarios for potential, downward and upward revisions. And so we could have skipped ahead to Friday, I think, but here we are. We'll start out with some positive news, I think. We are looking at domestic processing margins, very, very strong. Even $10 cash beans in central Illinois keep crush margins in the cash market, $2.90 per bushel crush is what those people are making. So those are your markets, I think. When we think about need for cash, especially in the next 60, 90 days, look for those ethanol and soybean crush plants. Those are going to be sort of priority, especially over the export markets and the feed markets, I think, which is, as we've talked about, well supplied to oversupplied. But there's going to be record crush, I think, in soybeans. So the domestic market's going to pull some of this away. There's going to be a regional outlet. Ethanol, too, we have seen not so much today, but in the last week, the swap cash ethanol market in the Midwest tests $2.06 per gallon. Today, it's quoted at $1.96, but using cash corn in Iowa, you're roughly $3.85 per bushel. And you've got margins that are pretty good, about a dime over all cost is what we would calculate. So the ethanol guys are making money at current prices. So I think they at least will be, buyers of breaks, maybe explain some of the support we've seen in the market since the middle of August. But again, just wanted to highlight domestic crush margins, processing margins are pretty fancy, relative to history. It's the export sector we've got to worry about, and of course, yields. So looking at this week's updated drought monitor, to no one's surprise, we did see, degradation, that abnormal dryness, drought in Missouri, Illinois, and Indiana, which of course is a part and parcel of having seen very little to no rain for the last 30 or 40 days there. But wanted to look at ahead of the report tomorrow, providing kind of a framework. Again, we do think one of the risks in the market on Friday is that perhaps they don't lower yields all that much. We talked about what we're going to get objectively are going to be plant populations, and we do think those will be very high nationally. So looking at the drought monitor's change in coverage from last week, you do see the kind of expansion, worsening in the eastern Midwest. But when we look at drought coverage compared to last year in early September, the sharp decline in yields ultimately from August, September to final, complete lack of moisture, very hot early summer. We've avoided heat and just wanted to communicate that even in northern Illinois, soil moisture, for whatever that is worth in early September, is better than it was last year. And of course, looking at the Western Corn Belt, Southern and Central Plains in particular, things are much, much better than they were a year ago. So what is the story when you put all of this together? I do think there is still evidence for record yields, and in the case of corn, maybe not so much change to the downside. Export sales also interesting, that not much change in the soybean market, given China still has yet to buy a single bushel. But even in corn, we have seen, a contraction in new purchases. So when we exclude old crop export sales carryovers, the exporter last week sold just 21 million bushels of new crop corn compared to 26 million in the same week a year ago. And while commitments are historically strong, people have really, really took advantage of cheap prices in late summer, those traditional markets that we've got. I do think we'll pay more attention to the pace moving forward. And something we've highlighted here in the newsletter over and over again is that world FOB price relationships have changed in the last couple of weeks. We are seeing pretty aggressive offers from Brazil and Argentina. Does that make a difference? Do we start to lose even traditional demand moving forward? So it's something that we'll keep an eye on. And soybeans, again, no change. We are in trade war mentality. We are seeing numbers very similar to 2019, and these have to change pretty quickly. Last week, new crop soybean sales, excluding old crop carryover, just 20 million bushels, and that compares to 54 million the same week a year ago when China was buying. So we got to kind of step this up. We talked over and over again about October, November being peak export season for the U.S. soybean exporter, and that window is closing pretty quick. And so thinking about drought coverage, export sales, balance sheets tomorrow, we just wanted to highlight that our yield, just over 186 and about 53.3 bushels an acre on soybeans, so down a little bit from USDA, still very high, still keeps balance sheets fairly loose. Our core yield is just 2% above the 20-year linear trend. And so I do think that fits when we think about vegetation health, crop ratings, drought coverage. Our soybean yield just 1% above trend. So none of these numbers would be terribly remarkable if you were to see limited revisions on Friday. So we're just kind of being prepared for making some moves in the market in the next month or so. Starting point being the September WASDE. And I think at Ag Resource, we, very soon after the report's release, kind of turning our attention supply-wise, because I think you do need a supply threat to be real bullish of grains for a long period of time. Southern Hemisphere weather, South America specifically. So we're going to watch the evolution of the Brazilian rainy season. It's not terribly wet in most places yet, but the forecast has been pretty consistent that northwest Mato Grosso, they're going to get the rain they need to start planting in bulk. Rain probably does expand into Mato Grosso, do Sul, and northern parts of Paraná. So it does look like this thing is beginning, but this again is going to be, I think, pretty important to the soybean market and price discovery, pretty soon after the report's release. So we are all preparing for the USDA's reports. There are risks on both sides. We'll see what that number is, and then we'll probably get volume back up and going once that report's out.
Yeah, good rundown, Ben. I would mention that CONAB did come up with updates to the old crop Brazilian today. It's the last CONAB update, and they put the corn crop at nearly 140, 139.6. We came up with a soybean crop that was 171.4. So again, bigger crops in South America means more competition for the U.S., which highlights where we are in terms of your export opportunity. Other than that, Ben, any final comments, and we'll call it a day?
I don't think so. No, like you mentioned, the market's doing, for all intents and purposes, nothing. We are waiting for Friday, 11 a.m., and we will adjust accordingly. But again, $1 gets you in. We will be making some moves if we see big market changes.
Yep. Thanks for the rundown, everyone. Have a good trading day today. We'll be back ahead of the USDA crop report tomorrow. Looking forward to those numbers and having more volatility in the market and thinking about what the yield is for U.S. and corn and soybeans going forward. Be well, everybody.